Welcome to the Kendall Report. In yesterday's action, we saw the S&P trade to an all-time new high and then reverse, taking out Friday's low and then closing at the low of the session. I'll go through a lot of details here in a few minutes, but we did get a STX buy signal on the NASDAQ, SPY, and the Russell. So this does suggest that we would see some rebound, but overnight we're seeing further weakness. The S&P is down around 23 handles and the NASDAQ is down over 50. As we look at what happened yesterday, it's hard to figure out what market participants were focusing in on. Was it the closure of the pipeline? Is that what did it? Did that raise expectations for inflation? It didn't seem obvious in a lot of places. The 10-year did move up. The 530 yield curve did steepen, but when we looked at the actual energy prices, there really wasn't any effect to speak of there. There were some, but not material. So what was it that market participants were looking at? And there was just a frenzy that started to build as the session came in toward the close. We saw some heavy selling coming in. The close was one of the ugliest closes I've seen for a while. And the follow through overnight, as I just mentioned, is somewhat worrying. So what we had, and I'll go through all these details in the technical section here in just a minute. What we had yesterday was a key reversal, which happens at an all-time new high. You get the new high, you take out the previous day's low and close lower. There's some standards that have to happen to confirm this particular pattern. As it sits right now, we're likely to see this pattern confirmed. Our long trade that we've had on for about 6 weeks was exited and actually got a short signal on the S&P today. In yesterday's thumbnail, it said market to 4,400. I still believe that's going to happen, but the reversal that we saw yesterday is likely to cause at least a couple days of sideways to down movement. There's a lot of support just under this market. We'll see how this plays out in the next couple days. There is really no material news coming out on Tuesday. It's not until we get into Wednesday and we start to see the CPI and the PPI and all the other numbers that come out, as I discussed in last night's video, toward the end of the week. We had plenty of fireworks for sure yesterday, but will it actually be material? We'll see if we can get some follow through tomorrow and close lower. One of the things in the back of my head that really is starting to eat at me is the inflation situation. As I've talked about in the past, we are hearing the Fed and the Treasury telling us that the inflation is transitory, otherwise temporary. This is the same thing that happened in the early 70s, and they ended up putting in price controls. We saw energy get out of control. There were gas lines, all types of stuff. There's definitely that element out there that people are worried about. I think the other element that's playing out into the markets right now is just the pure incompetence of the government from the standpoint of dealing with these type of crises. You could almost put this in a category of a black swan. If we don't get these fuel lines moving pretty soon, it could start to become very material very quickly. So the next several days will definitely be important, and we'll find out more about really what people are reacting to. I think for the most part yesterday, people are just taking protection. So let's take a look at the charts and see how they're set up for Tuesday. As I begin with the WaveTech Database, one of the things that convinces me that we're not likely to see a material move, just not yet on the downside, that we only saw about 500 net sells. We did get 895 sell signals versus 299 buy signals. So we did see the percent bullish downtick from 59% down to 55.44. But this is still not material. The key numbers are going to be at the 42% level. There is some minor numbers to watch around 52 to 48. It does not look like a lot of short-term signals rolled over, which is somewhat encouraging in this pattern. So as we go through the next couple of days, we're going to be watching this very closely for those two numbers I just mentioned at 48%, and then 42 will be the key number. Depending on how this market trades over the next couple of days, I will be able to determine how the rotation is going to play out. As we begin with the review of the S&P 500 futures, we are down 28 handles right now, down 0.67. The low has been 41.49. We're trading 41.55 as I'm doing the report. We're seeing the PPMs move down, but they're not into a downtrend mode. In fact, PPM 3 is still at a plus 0.12. That will be major support at that 40.82 level. As I mentioned in the opening comments, we did get an outside reversal bar yesterday, which is important. If we get a lower close today, that typically will signal at least 2 to 3 more days of lower prices, and we could see an extension down toward this 40.82 level. There is some other support levels that I will go over here in a few minutes when we go through the SPX. You'll also notice that there is a red arrow on this, and this is a short signal on the futures. So we went long on April 2nd on 4.2 at 40.14. We got a sell signal today on the close 41.76. It was an aggressive reversal signal. Now we're short at 41.46. You'll see as we look at the market grid. As we look at the grid for today, we've already traded down to the S2 level 41.48, the low 41.49. So we're likely to see an R1 S2 level. I think we're probably at the extremes for the night. But if we take out the 41.48, the next numbers are 41.34 and 41.21. Now we go back to a couple of weeks ago, the low that we had was at the 41.20 level. So we're getting close to that level. But as I mentioned, if we get a lower close today, this will confirm the outside reversal, and we should get 2 more days to the downside. I did do a special video some months ago, was how to short Apple. You might want to look at that. I spell out all the rules for a key reversal pattern. That's what happened on Apple several months ago. So you can go back and watch that video and see the exact rules for this. But it does suggest that for confirmation, we would need a lower close today. As we take a look at the SPX, we did get an STX buy signal. The STX number 4193, we closed at 4188. This typically will suggest that we'll get at least a move back into an R1, R2 level. That would suggest a move as we look at the market grid for Tuesday. That would suggest a move back to 41.99, 42.11. There was a lot of resistance on the sell-off today when we came into the close, right at 42.06. So if we get above 42.06 up to the 42.11 area, we could start to see somewhat of a reversal. And the one thing that I mentioned on the sell signal that we got on the futures, none of the sell signals over the past several months have worked very good. And it will be primarily because of what I'm going to show you on the weekly chart as we go to weekly SPX. The PPMs are at a plus 0.85, 0.58, and a plus 0.56. And what that suggests is that the lowest that we're likely to go would be toward that 10-week moving average 40.94. We also have STX number at 41.56. We could see that tested today. I suspect that will be the extreme low for the week. That's what's projected right now. If we did get below that, I would suspect we would rally back as the week goes on. Now, just talking a little bit about this situation that's going on with the pipeline, if all of a sudden that thing's fixed, you're going to see probably a big reversal pattern to the upside set up. We'll see how this thing trades on Tuesday. And that should give us a good feel for the next several sessions. Next market I'll cover is the NASDAQ. NASDAQ has a much different pattern. As I mentioned in last night's video, there was some overhead resistance that was likely to be pretty substantial. In yesterday's, we traded up to 13,782. I mentioned the 13,800 and the 10-period moving average at 13,713. So we traded right in between there, and that's where the reversal came from. And we closed well below the STX was 13,491. We closed at 13,356. But we are seeing quite a bit of follow-through, just like with the futures. on the S&P. We did get a sell short signal. Stepping back just a few days ago on 5-4, we got a sell signal to exit our long position that was on going back to 323. So we did get a sell signal on the open of 5-4 at 13,785. Well, today we got a reverse sell short signal at 13,316. And just like I mentioned in the S&P futures, there has not been a lot of good short signals come out of this market for a while. Just a quick look at the weekly chart, and this will tell you a little bit of the story. We did get below that 21-week moving average, which I thought would represent substantial support, but we did see the PPM2 deteriorated substantially. It is now only up 0.18. So the potential on the NASDAQ on a sell signal would be a possibility of trading down to 12,529. And we'll have to go to some of the longer term charts to pick up some numbers from a grid viewpoint. But we are seeing a plus 0.42 on PPM1, which suggests that that number is going to act as a magnet. The markets are going to want to trade back above that 13,464 number. So that is a number I'll be watching for the next couple sessions. The final market that I'll cover tonight is gold. Gold continues to move toward the 200-day moving average, which is currently 1863. On a weekly chart, there is strong resistance right at 1852. We saw a high yesterday at the 1846 level, and the market's trading in a sideways pattern. My expectation would be for a consolidation for several days, the possibility of challenging that 1852 to the 1863 level over the next couple sessions, but I don't see us getting above this number just yet. We are seeing some very positive configuration come into the weekly chart. We're likely to get a buy signal suggesting that prices are going to move well above that 1900 level over the weeks to come. My expectations for today is that we will see a S1 R2 level. So far we've had an S1, we have not reached R1. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hi, my name's Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.